Hello, good afternoon. Uh, how is it going? I hope you are doing fine. So in this short video, I'm gonna show you how to use this Williams percentage R and just an envelope moving average. So it's just an indicator that you are gonna use to enter your trades. And I'm using a kind of strategy to execute trades that when you have a losing trade, you gonna use some kind of strategy to recover your losing trades using this pocket option broker. So now I'm gonna dive into the usage of this Williams R. This Williams R7 percentage is an indicator that is used to 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 see or to analyze market pressure based on trends. For instance, now you as a trader, you know how you identify your trends. I know you know how you do your top-down analysis. I am trading 1 minute. This is my expiration time. Let's say you are trading $1 per trade. You are opening your position with $1. So what you are gonna do here is you do your top-down analysis in 5 minute time frame. Don't go far above than that. Like in 5 minutes, check the trend. For instance, this pair, you see my market trend is downtrending. It's downtrending. So you check your entry, your area of supply. You have to be checking your area of support and demand and supply zones. So you see in this case, we are not going to enter this trade until it comes back to this position. Maybe we will look for an entry there, because now it seems to be this is not an area of supply. This is not a supply zone in this matter, because the market is trying to form another this thing, another structure. So we move to another pair. But before we proceed, I would like to show you something. How this Williams R7 is being used is when you are checking your, after you have finished checking your market trend, you analyze the market, you wait for the current candle. If you are looking for a sell trade, you wait for this indicator, this moving average in the Williams R. If it's crossed below this red line and the candle close, if the candle close and the Williams R is below the red line, you execute your sell trade. And if this candle moves bullish and the candle close when this one is passes through this green line, that means that as soon as that candle is closed, the next one that is going to open, you execute your buy trade. Let's wait for this market, you see. So now we have to wait for this candle to close, because this Williams R shows us that this market is gonna be bullish. There is a kind of buying pressure. So we have to wait. If this current candle that is having less than 13 seconds ends and our line is above this green line, we execute the trade. While if the candle ends below, we leave the trade. We are not going to enter. So we wait for the trade to come back. We wait for the opportunity, because now I don't have the confidence and conviction to enter the trade. I just want to show you an example. And I don't know whether if you know a strategy called martingale. A Gale strategy is a strategy used to recover losing trades after executing. For instance, you enter trade with $1. It will give you 51% of this $1 after you win the trade. So if you lose the trade, you multiply this one by 2 and go in the same direction so that you recover your losing trades. I don't know whether if you know it. So I combine the use of this strategy with the Williams percentage R and this envelope moving average. This moving average, I will show you I will send the configuration to you. Let me change this fare please. Now you see I'm trying to find an entry here. Let me see 5 minute time frame. Okay, you see there is a kind of self ratio. So let me wait for the candle to close below my Williams R7. Then I will take my sell. I will take my sell. Let's see how it will go. You now come and multiply this your amount by 2. You wait for gel, because if it didn't favors us, you will go for gel 1, gel 2 and gel 3. So if you are trading $1, you need to have like $15 in your account so that you follow full gels. If you are trading $2, you need to have like $30 in your account so that you follow full gels. If you enter a trade with $1, you lose it, you multiply that one by 2, you go back with 3. That means you lose 1, now you are entering with 2. I hope you get it. So that's how it works. If you lose the gel 1, you multiply that $2. You see we have won this trade. Let me find another entry and see how it will go. This one I don't have the confidence and the conviction to enter it because already is in sell and the sell is already exhausted. So let me see if I can have the confidence in this pair. The network is a little bit slow, but let me see if I can have the confidence here to execute this trade. No, no. So you have to wait for the market to come. Don't chase market. You have to wait. I am always mentioning after you did your analysis, time frames and top down analysis, this market is uptrending. Let me see what is happening in 30 seconds. In 30 seconds, the market is trying to change direction, but let us see a little bit. Let me change this here. I think I'm gonna have a sell trade now. You have to be considering this moving average, this envelope. Also, the envelope gives you the confirmation to enter the trade, but you have to wait for the 2 good confirmations. The first one is this envelope. This, for instance here, this bullish candles, as soon as this candle close above the envelope, you have your entry. You can buy this candle, last candle that crossed the line. If it ends above the envelope, the next one that will open, that's the second one, this one, you can enter the trade. And likewise, this sell trade, if this candle closes below the envelope, the next one that will open, you can have the confidence to enter the trade. But if it doesn't close under it, there is no pressure, don't enter. So sometimes you can go for this confirmation if you are sure of the trend, but if you are not sure, you can just wait for the confirmation to give you both the 2 indicators to give you the confirmation to enter the trade. Let me change this pair because it's trying to waste my time. This one is a little bit pressurized by buying. Let us see it in 5 minute time frame. Yes, we can go for buy. Let me wait for the confirmation. Let me wait for the confirmation. You bring back your this thing. Here I already have the confirmation to buy. Let me see. Let me be ready for my gel. So now we hedge in this matter. We hedge, we go back for sell because the market has already changed direction now. So this is what we call hedging. If you see the market direction has been changed, you go back and place a sell trade if you are buying, while if you are selling, you go back and place a buy trade. This is a rough decision to make because the market can come and disappoint you, just like it did to me now. So this is how it works. You come and do hedging again, you multiply this one by 2, you place your buy. Since we are already we already analyzed our market that is bullish. So I hedge and the hedging doesn't work. So this is how you execute your trades. Let us see how this one will end. I am in Gale 2 now, don't forget I am in Gale 2. The first one I just gamble and hedge so that it will just give me what I wanted, because I see just like that the market has changed direction. That's why I do that hedging. So now I go back to my direction. Even if this one didn't favor me, I will still have to go back to buy again. So let us see how it will end. Because I already have the confirmation, that's a buy. If had it been I didn't change direction, you see this $4 recovers the losing 3. So this is how you use the Williams percentage R7 and the envelopes. Thank you very much for watching, and you can you can hit the subscribe button for the channel, and if there is any problem you can just contact me on Twitter or uh, any other social media handle that you have for me. Thank you and you are welcome.